Since you are here, it means that you are serious about your learning and you really want to be a good trader that you are. I'd like to welcome you to my website and the first chapter of 3-Step Trading, because the first chapter was to welcome you and make you understand the basics. But now we've gotten to the real deal of what trading is. I mentioned that the first thing we'll talk about in this chapter would be candle patterns. But let me start you back from you setting up your trading account, because I don't want you going to understand the candle patterns when you don't know the setup of a trading account. You've registered. Let's conclude that you've already registered your account. You've found your broker, you've registered, and now you are on the actual trading platform. You have to choose the account that you want to use when trading. I will not confuse you much about the types of accounts because they differ from one brokerage to the next. I will just start you with where you have the same thing in every other broker. Firstly, the leverage. You may be wondering, what is leverage? We can all look up the definition, but we all need to understand what it really means, what it is. So I'll make a practical definition for you of what leverage is. Let's say in your account you've got $10,000. And then you have leverages that you have to choose from. 1 is to 1,000, 1 is to 2,000, 1 is to 500, depending on the choices of the numbers you have in front of you. Then that is when leverage comes in. The 1 on leverage stands for the $10,000 you have in your account. It stands for the amount of money you have. It could either be $10,000, it could be 100 rands, it could be 40,000 pula, regardless of the currency. The amount of money you have there is the one that the 1 in leverage stands for. Then is to 10,000, 1,000, 2,000 leverage. The 1,000 means that the amount of money that you've put in that account with that broker allows you to be in markets of up to $1 million. The 1,000 stands for the amount that you are allowed to trade in the markets in the financial markets. We got that, right? Great. We will go to the next one. We're still setting up your account here. We haven't started trading. We haven't looked at candles. So stay with me here. The second one would be your lot size. The lot size is what determines the number of pips you've made in profit or the number of pips you've lost in your risk that will be lost. For instance, if your lot size is 0.01, you can make a loss of, let's say, 5 rands, minus 5 rands. You'll be in the reds with just 5 rands. But if your lot size is 0.1, for instance, which is 0.10, or you could even be on an actual big lot size, 1 lot size. You could be on the same price level, same price range from your entry. You could still be in a way bigger loss than you are on a 0.01 lot size, because the bigger the lot size, the bigger the risk. We will talk about how much you don't want to be open a big lot size based on your account size. Okay, but let's firstly finish the setting up of the trading account. The next one would be the currency you choose to trade with. For instance, I'm South African born. I travel the world. But whenever I trade my accounts, I make sure that I trade accounts that are bigger and a stronger currency than mine. In that way, when I am in a market and I make, let's say, 20 pounds, I know I didn't make 20 rands back to my home currency. I've made plus minus 500 rands, which is what makes trading in a bigger and a better currency is for you. I hear people saying, it's the same thing because if I make that in this market, I could make that in the other market. No, it's not the same thing. The currencies are not the same. So why should the prices be the same? These are some of the secrets that I'll be sharing with you by joining this website and this learning that would help you to become a better trader, where you will not depend on Lela Tati to teach you what to do, when you will not depend on a mentor and a guru to guide you on how you should be doing on the financial markets. Because we all get our best from the markets. But do you know what we also get as much as we are knowledgeable? Is the worst of the markets, right? Another point when you are trading, you gotta know that when you look at your trading platform, it favors you in every sense. Are all your tools of trading there, your shapes, your trend lines, if you use trend lines, if you have a specific strategy that you use, because there's different ones, is there a way that in the way you are trading, you would be accommodated? Then I guess we are done. You fund your account. Now you are ready to start trading. But before you start trading, wait. There is candles. You need to understand what is going on. You need to know which way you are going. Because remember, from chapter 1, we said, we have to stop buying when the market is selling and stop selling when the market is buying. You already know what that means, what buying and selling are. If you don't, please don't hesitate to go back to chapter 1 and learn a bit about the basics, which is free of charge. And for those that came straight from chapter 1 to this one, we can just proceed. Let's say now you are looking at your charts, you are seeing these colors, you don't understand what they mean, which I've already explained that those are candle patterns. What are candle patterns and what is their importance in trading? Candle patterns are the crucial tool that we use in technical analysis, which help us to reveal the price movement, the potential price movement of the markets, the market sentiment, as well as trend reversals. You know there's trends in the market, there's up, down. So with all those parts of the trading journey that you have, you know very well that candles play a big role. But I want you to know one thing, and I want to highlight it. Please put it in your nota bene notes, in your very important notes when you are writing your journals. The candle color does not matter, because the color of the candle depends on whoever it is that decides to put a certain color on their trades. So don't go there having memorized that, oh, red candles mean selling, blue candles or green candles, depending on the color, mean buying. People can twist those around depending on their liking. And that's where you would get things wrong. And also, in terms of the candles moving, when I say they don't really matter the color, it's because you could tell yourself that there's a lot of candles moving on an uptrend. It means that, oh, those candles mean that the market is going to be buying. Only to find out that, yes, the market could be buying. However, if the candles are red, it means that the market is rejecting from buying. It's going down. So more sellers are taking up space in the trading charts. Therefore, you should look at more of a trading going down kind of opportunity. We spoke about candle movement, candle sentiment, and all of that. We want to now go to what the definition of that is. Okay. So I'll just refer back a bit for you to what that is in terms of trading. We'll start with the first one. Candle patterns have got different types of trading, like different types. We've got engulfing candle movement, we've got doji candles, we've got shooting stars and hammers, right? We are going to go back shortly to the definition of market sentiment, candle movement and price movement and trend reversals. But now let's start talking about the hammers, the doji candles, the engulfing movement. The engulfing movement, as you see on this particular diagram, we have a red candle which represents selling candles or a downtrend, having more momentum than the green candles. Green candles represent buying in this case. But as you can see there is a big red candle that represents that the market is going down. And even if there's a change of color in the following candle, if it's not as big as the previous one that was big enough, don't be fooled by the market because liquidity comes in at those points. Just go for the third candle that comes from the first one, which was the big one. Then from there, the green one that comes, if it's smaller than this one, then you know that, okay, let me wait for the third one that's forming. If the third one that is forming is also green, but it's bigger than the first red one, then that's another type of engulfing candle movement, meaning that now the buyers have really pushed the price to where they want it to be. And it means that the market is going to go on an uptrend. Also, considering that on the week, there isn't much rejection. What do you mean much rejection? in terms of candle movement, when there's a bullish trend and there's a downtrend, which is a bearish trend, what happens is a candle is formed of 3 parts: the body, the wick, and the size. All right? So we will start with the wick. The longer the wick, the bigger the rejection. Either the rejection is going down or it's going up. If the wick is longer, it means that there is a rejection of whatever the direction of the market was going. But if the wick is shorter, it means there's momentum in the trend and there's momentum in the direction towards which the market is going. So let's look at the bullish trend. Let's assume the market is going up, with the 3 parts of a candle being the wick, the body, which makes the color, and then the opening and the closing. Looking at this diagram on a bullish trend, the market opens at the bottom and closes at the top, because remember, it's going up, so it has to open at the bottom all the way to the top. If it rejects, it doesn't go all the way to the top, or it goes all the way to the tops but is pushed back down, it means that there's a rejection, and the stick that you see there that is long is called a wick. That is where the rejection comes in. Oppositely with selling. Selling is literally when the market on the candle for the market for selling opens at the top and closes at the bottom. The bigger the rejection, the biggest breakout or change in the direction where the market is going. So if you have a red candle opening from the top, closing at the bottom, but it doesn't close all the way down, it closes halfway or has a smaller body, we form there what we call a shooting star, right? Some call it a hammer because there's a hammer that is bigger, but there's also a hammer that is smaller, which is now called a shooting star. A bigger hammer says the same thing similarly, but it has more momentum than a shooting star. The one thing that the shooting star is saying and that it means is simply indecision of the market. Let's say you had your trend going, and then the market decides that, you know what? Let's put a shooting star up there. It means both the sellers and the buyers are pushing the price to a direction that will be favorable to either of the parties. Therefore, the market is not sure whether are we going to sell next, are we buying next. If the market was going on a downtrend, for example, it was on a supply. If it was going down already and then it shows a shooting star, it means that the market is not sure whether it should continue with this particular trend that's already ongoing, that has momentum, or it could just change the trend onto a bullish market.